Hey everyone, welcome back to the channel. Today we're diving into an important topic for anyone with a retirement account, required minimum distributions or RMDs. Whether you're already retired or planning for the future, understanding RMDs is crucial for managing your retirement savings wisely. So let's get started. First things first, what exactly are required minimum distributions? Simply put, RMDs are the minimum amount you must withdraw from your retirement accounts each year, starting at a certain age. The IRS requires this to ensure that your retirement savings don't just sit in your account forever. They want their tax revenue eventually. RMDs apply to any pre-tax retirement account, including traditional IRAs, 401ks, 403bs, and more. After-tax accounts like a Roth IRA don't have RMDs during the account holder's lifetime because taxes were paid up front when contributions were made to the account. So, when do you need to start taking RMDs? Currently, RMDs kick in at age 73. This was recently changed, so if you're nearing this age, be sure to check the latest rules. And remember, the year you turn 73 is the year you must take your first RMD. However, you do have the option to delay your first RMD until April 1st of the following year. Just keep in mind that delaying means you'll need to take 2 distributions in the same year. Now, how exactly are RMDs calculated? The IRS uses a formula based on your account balance at the end of the previous year and a life expectancy factor from their tables. Don't worry, you don't have to do the math on your own. Most financial institutions will calculate your RMD for you, but it's always good to understand the process. Now, what if you inherit a retirement account? RMDs work a bit differently for inherited accounts. The rules depend on whether you're a spouse, non-spouse, or another type of beneficiary. Rules for inherited accounts vary based on your relation to the decedent and whether or not the decedent passed before they were required to begin taking RMDs or after, so it is critically important to consult with a financial advisor. You may be able to take out however much you want from the inherited account as long as the account is liquidated within 10 years. However, you may fall into a category where you have to take the specified RMDs over the 10-year period. However, if you're a spouse, you have more options. You can treat the inherited IRA as your own, delay RMDs until your own RMD age, or follow the 10-year rule. Each option has its own tax implications, so it's important to choose wisely based on your situation. For other types of beneficiaries like minor children, certain disabled individuals, or those not more than 10 years younger than the decedent, different RMD rules might apply, so be sure to consult with a financial advisor to navigate these complexities. Now, let's talk about what happens if you don't take your RMDs. Missing an RMD or not withdrawing the full amount can result in a hefty penalty. As of now, the penalty is 25% of the amount not taken, so it's really important to stay on top of this. Finally, let's discuss some strategies for managing your RMDs. One option is to start taking distributions earlier, even before RMDs are required, to spread out your tax liability. Another strategy is the qualified charitable distribution, where you can donate up to $105,000 directly from your IRA to a charity, which can satisfy your RMD and reduce your taxable income. Also, if you're still working and have a 401k with your current employer, you might be able to delay RMDs from that account until you retire. This is known as the still working exception, and it's worth exploring with your plan administrator if you're in this situation. So there you have it, a quick guide to understanding required minimum distributions, including those tricky RMDs on inherited accounts. I hope this video helps you feel more confident about managing your retirement savings. If you found this information useful, give this video a thumbs up, share it with your friends, and don't forget to subscribe to the channel for more financial tips. Until next time, take care and happy planning.